Let's look at Prevest Denpro's quarterly results. The company reported sales of 15.72 crore this quarter. That is lower than last quarter's 18.5 crore. So about a 15% drop quarter on quarter. But compared to last year, sales are up almost 18%. So the long-term trend is still looking good. This dip seems to be mainly because export orders were a bit slower this quarter. On the expense side, cost came in at 10.2 crore, which is actually lower than the last quarter's 11.9 crore. And raw material cost stayed steady at around 22% of sales. So no major inflation pressure there. Employee cost went up to 17% compared to 14% last quarter, meaning they are spending a little more on payroll. But overall expenses are under control. Operating profit came in at 5.5 crore, down from 6.6 crore last quarter. The operating margin stayed strong at 35%, which is very high for a company of this size. This shows that the drop in profit was only because revenue fell, not because cost went out of hand. If you see, other income was 1.17 crore, similar to the last quarter, so nothing unusual there. And profit before tax came at 6.2 crore compared to 7.2 crore earlier, and net profit came in at 4.6 crore, down from 5.2 crore last quarter. So that is about a 12% fall in profit quarter on quarter. But if you look year on year, profit has actually grown by 26%, which is impressive. EPS came at 3.9 rupees versus 4.4 rupees last time. So overall, Prevest Denpro is a niche dental products company, export focused with very high margins and a clean balance sheet, zero debt. The only issue is sales fluctuate because of order timing, not because of weakness in the business itself. So in the short term view, in the next couple of quarters, results may remain a bit uneven depending on export demand. So investors should not expect smooth growth every quarter. But in the long term view, over 2 to 3 years, the company has a strong position in the dental segment and can grow steadily if exports scale up. Margins above 30% make it a solid business if revenues keep expanding. And we need to understand some risks involved in this company. So first one is heavy dependence on exports, which means global demand or currency changes can impact numbers. And it's still a small cap stock, so volatility will be higher. And employee cost rising could slowly put pressure on margins if not managed well. So what do you think? Can Prevest Denpro turn its strong margins into consistent revenue growth, or will the dependence on exports keep making sales lumpy? Let me know in the comments.